Okay, everyone, and welcome back to the Morning Edge webinar. Let me go and move this out of the way. And let's go in and start the analysis on the majors. So the first take we're going to take a look is at the euro dollar, and we talked about that yesterday. I've gone and updated the support. I think we had it listed at 340, and I thought they could go and make a dip lower, maybe trigger some stops. This whole area I thought was good. We talked about this. Let's go and pull this out here. See where we stand. Starting out the new year, and it was still relatively low liquidity. I thought some people that had bought on Friday and also Monday, I think the market just caught them dead to wrong. That's it. Caught them, I wouldn't say flat-footed, but they were just on the wrong side. And, I don't think it was as easy as, it mentioned in the Reuters article. Well, we came into the new year and we just said, let's put on some new dollar shorts. No, it wasn't like that. It's just that we'd had this big spike run up, and there were people that were trying to buy it in here, and it looked at that time, it was a little bit crazy, but it looked, I'm sure there was a lot of people that were thinking, okay, we're going to move much higher. We're trying to buy at 568, and we're also buying at 519. And while we talked about, the necessity for a back and fill as we came to the new week, as we came down here, I think they knew they had these people caught flat-footed, and really it was sparked by what was happening in the boons, and that just accelerated it. And before you know it, selling baguettes, selling, and before you know it, we're going down. Then everybody's thinking, what the heck was I thinking trying to buy the euro on Friday and on Monday? And essentially that was it. And they really pushed them for all it's worth. And we talked about this. It was reminiscent to a certain extent, but on a bigger scale, of what we saw here as we took out some stops above the 467 and opened the door for us to go lower. And we talked about that. We weren't even sure how much further they're going to push beyond here, because as we came in yesterday, we talked about how this low here had fallen short by 3 pips of this area here. And at the time, we were at the low was 372, and it was 3 pips above here. But just like a couple of the listeners were saying, hey, look, they want to hit stops. They want to hit stops. And it certainly looked like that was the direction they were going to go into. They were going to go in and try and trigger some stops. And I didn't think that, I knew they could probably hit some stops, but I didn't think we'd be able to get a whole new leg. Now, we thought if everything really goes, initially south, even then it was going to be limited, I thought, to this 295. But like I said, the stop run, they got past here, and there weren't that many stops. I think we were looking at 340 at the time. We came back in here, and really I thought if it does cover, we're probably just going to come right back into this area, which was up to this 423. We've actually gotten beyond it, pulled back, and now we're back beyond it. But with the successful test of this area here, I believe that going forward, once we get past the NFP, and I think the NFP is not going to be that big of a deal. I think it's going to be anticlimactic. If people want to act like it's a big deal, they can act like it's a big deal all you want. But it's really not going to be a big deal. It's already been decided what the FOMC is going to do. Now, nothing's set in stone, but I'm saying for right now, for the foreseeable future, it's already been laid out last month. There's no big changes now. You see what I'm saying? So now it's just like what happened here, and this had to do with low liquidity, the holidays, obviously the spike up here. And we're going and point this out. This spike up here, the holidays, low liquidity. This spike down here, the holidays, low liquidity. Okay, you know what? We caught y'all wrong-footed. Now we're going to take it south and see how far they can go and press it. Essentially, that's what it's been. I'm saying, and you look back. If you look back in retrospect, it seems like it's easy. It's not. But I'm saying is once we get past this NFP, I think it opens the door for us to go in and venture back up here to 534, right here at the 61%. I think that eventually the market can go, higher. We'll have to see where it is. Like I said last week and yesterday, I'm not here trying to forecast. I'm not even interested in forecasting. I think it's silly when people ask me, now what do you think? Do we go to 109? And ridiculous, stupid things like that. It's look, you saw what happened here and stopped out a few people. Then everybody was cussing themselves out, wondering why was I covering my shorts as we dropped down here. I'll never want to buy the euro. And then we turn around and obviously this part up here was in the holidays, but look, we get this big move. How can I not think the euro was a bargain up here? And then before you know it, yesterday, wow, what an idiot. How could I buy the euro? So I think it's, take it for what it was. Look, I just tell it like it is. I think you're a freaking idiot if you're over here trying to forecast where the euro is going to go. I mean, there's nothing wrong with saying, hey, look, I think we're going to go to parity. We're going to go lower because of this or that. But on these short-term basis, if you're trying to trade and I can tell you right now that we put in this bottom, we're definitely going to 108. This is silly. Like I told you before when we were talking about the bonds, specifically at the time I was saying, look, they just move level to level. I'm just looking at stuff in a very short-term basis. They're just moving level to level. Obviously, the holidays have causes, extra gyration. But once we get past NFP, and everybody on their desks are fully staffed at that point, I think it opens the door for a correction. And I think, the risk is, and one of the guys was saying yesterday, he said, yeah, that makes sense, that the Trump administration is probably going to jawbone the dollar lower or attempt to. I think they're going to do more than that. I think they're going to be screaming the dollar lower, to be honest with you. I think they might even start, Trump himself may start talking about currency manipulation, and people aren't stupid. They know that. I'm saying is when the market's going down here, they're thinking, wow, how much longer do I want to stay? The dollar's had such a phenomenal run. I bet when Trump gets in the White House, he's probably going to be saying, a bunch of currency manipulators out there. We're not going to allow the dollar to go this high, blah, blah, blah. And next thing you know, before you know it, we're seeing the euro back up here. How much further? I don't know. We'll see when we get there. But for right now, once we get past NFP, I think the door is open now for 534, the 61%. That will eventually be tested. Okay, and if once we get past that, we can go back up in here to this level. If you look at it on a very big term or larger term basis, this actually just past this area would actually be the 61% of this move, and I'll show you here, which is something just to think about going forward. You see the 61%? There comes the 671. Now, it goes back to the same thing like I said. You got to crawl before you can walk. You got to walk before you can run. There's no need to worry about this area right now. Let's get past NFP and then we can talk about it. But you got to plan things out. You got to kind of have a general idea because it helps you. We talked about this yesterday when the wheels were really, at the time, looked like the wheels were coming off the caboose. And when we took this turn down here, I said, can they make new lows? Because I was saying, hey, look, I had some support here in the 420 here, and we took this dip and we got this 397. Once we got past it, I'm thinking, well, last time I tried to make a low, it barely took it out. This time it fell short of 3 pips. Here's 3 pips here. It still can't go. Can they trigger the stops? Yeah, but when you didn't get this follow through, it opens the door for higher. Now, people already got their rear ends kicked here on the way up. They got the rear ends kicked on the way down. So no one's looking to rush in. They want to get past what's the next big event, and for them it's going to be, this NFP. Although, as I said, I think it's going to be rather anticlimactic. But once you get past that, it kind of opens the door up. So people are going to say, well, I'm not going to be shorting the euro anymore. Not right now. I'll short it with both hands, but it's got to come up here. So that's going to open the door for us to just move higher. It's the same thing that you saw in here and here. Once you get a little bit oversold, then the market you have people that are saying, I'll sell it, but I won't sell it down here. And then the market just starts working higher back up here before people say, this is a good area to take a stab on the short side. You saw the same thing right here and here. So I think once you get past that event, we can work up the door and that'll open up for 534. So right now for today, let's go move this out. We've got to get our analysis out of the way. Today it's a little bit slower. Getting used to using the way this computer's set up sure makes things difficult, but I had to switch computers, not necessarily that I wanted to, but the other one was already starting to give me some problems. And to be honest with you, it's been just a big, I know Pipsar went through, it took him a little while, it took him about a week to get everything transitioned, and I'm going through the same thing. You know, it's frustrating. Passwords for Lightwave don't work, and other issues don't work. My computer doesn't like my Reuters feed. One of my accounts, it doesn't like the password. It put me in a SIM mode in one of the accounts. It's just been doggone it. It's been one thing after another. But hopefully we'll get it all switched out. But at least it's a better computer. That's not that it's a better computer. It's just well, it is. But I'm not gonna have those problems I was having with the little shaky windows going like that. So looks like the dollar cat's getting whacked here at the moment, and we'll take a look at that. Let's take a look at what crude's doing. Well, we've had a pretty nice pullback in crude. And look here, we had that little resistance there. Remember we talked about that? We'll get into that. Okay, we're going to cover these majors first. But let's see what dollar cat, because I haven't updated anything. So yesterday it was 33.95 because we were much higher. Right now we got this 33.10. So let's take a look at it because it's moving right now. This 33.10 is some decent support. Let's look at it on a fib just quickly because it's what's moving right now, and it's after a pretty nice pullback in the crude. Do we have a confluence? 32.79 is going to be the 61%. I mean the 61%. So let's go and mark this off. And 30.81 is the low. Well, I got marked here at 30.80. 35.99. Now, we do have some nice support here at this 33.10. You see that coming across the board. We'll take a look at that. Very nice support area here, but, you know, if crude's getting whacked, I like this level just below. I don't know why I've got this here. Let's see. I like it. If you look at the touches, it probably makes it. Well, there's a grouping here. We do have a grouping right here. It comes in a little bit lower than 33. That's 32.92 and 32.79 is a 61%. My thoughts would be, as you take one more test, we'll be able to get down here. So let's go on and just match this up real quick for that. So right now, resistance is going to be 33.88, which is the top of this zone here. You see that here? All these touches. So it's going to be 33.88, and support is going to come down here at 32.56. But before you get there, we have this 32.79 is a 61%. So support's going to be 32.56 with 33.88 as resistance. And it looks like we're going to have to come back for a correction. This all plays into the whole idea that the dollar's probably going to go on and look for a correction here in the dollar. Let's take a look at something real quick. So 32.56, 33.88, and we're looking for this correction, which you've already seen this here as we came back up in here. The market ran out of gas. You saw crude take a drop here, and that opened the door for us to go lower. So once again, 32.56 and 33.88. Let's mark that off. Overall, on the longer term basis, it's bullish, but now you have to say it's turned to, let's just call it neutral. I don't know if the neutral's in here. Range, bullish range. Yeah, I guess you could call it range if that range is in as close as you can get to neutral. Okay, let's go and get going. We'll get some time flying here. And let's see what happened here in the crude oil market, because that's what precipitated this move in the in the what you would call in the dollar CAD. And we talked about this area here. You saw here we had the touches, the 55.18, because I had not updated chart for the crude oil in a while. And here's this 54.38. So once we got past this 54.38, it really opened the door for a whole lot bigger move lower. Let's take a look where we're at. So and we're just doing this because right now we want to take a look about what's happening here with the dollar CAD. So 51 is at 38%. We'll mark this off real quick. That's 43.76. Okay. And for some support, additional support right now, got this area here, which is where they came to. We'll just leave it like that for now. And resistance is going to come right here. Right there. This looks like about, what, 53.30? Take a gander at that. Hey, that's pretty good. It's at 53.31. So, it's going to have a tough time. On any rallies back, it's going to run into resistance at 53.62. I mean, 53.30 is initial, but where they're going to look at, where they can shoot for. Right there, see what all this little grouping is? Right about there, 53.66. And if you're looking at it on a fib, we get that area to hold. You're looking at 53.30 being the 38%, and 53.66 being the 50%. I'd say that, but that'd be a long road to hoe. I mean, long haul to get up there. So obviously, this 53.31 is looking pretty good, and that being the 38%. But it looks like we're gonna have some trouble here in this dollar CAD, and with the dollar starting to correct. Let's go and take a look where we stand here in the cash dollar index. So we did get that little spike up here, you know, and got a little bit of a shooting star, which opened the door. Almost kind of, like I said, this is one of the reasons why I was telling y'all I don't pay that much attention to the cash dollar index, because here is this cash dollar index on a 2-hour chart, right? And you see this almost looks like a shooting star, okay, right? Look at this bar. Now flip this bar upside down. And look. Almost identical to the same bar. That's the same. The euro dollar comprises 56% of the cash dollar index. It's one of the reasons I don't pay that much attention to the cash dollar index. I mean, this bar is nearly 100% identical. That bar here is nearly 100% identical from an inverse relationship to this exact bar here. You see what I'm saying? So, but anyway, let's get there back in here. So, resistance right now, I mean, obviously right here we got 315, but resistance actually come in where these touches are, I would say. So that would be 341, forget this 357. I mean, on a longer base, you can say that. It's still, I mean, from a bigger chart, you can still say 357, but I would say any moves towards this area, they're going to find them. So it'd be 340, with support for that now on a short-term basis, 263, 340 and 263. So for a moment. Okay. Oh, and let's take a look where we stand here on the dollar yen. So we've been talking about this 1815 since Moses crossed the desert. I mean, we've been talking about this 1815 literally for weeks. We're seeing the bonds take a pretty big pop in here right now. Bonds are at 50.24. They're not. We've seen this very nice pop up here in the bond market, and we'll just take a quick look to pop back. That can impact the dollar yen. We'll just take a quick look see. Okay, Andrew says he's got 32.78 as support. Pauly, for what it's worth on our chart. Okay, great, good stuff, Anders. Yeah, Eric says darn technology. Take a look at the dollar CAD. It's the dollar CAD. The bonds. Hang on, we'll jump into that real quick. We're kind of jumping all over the place right now because different markets are moving, and we're getting some big moves right here in the bond market. Right here. You see here? Now, on a short-term basis, we got 51, and that is the overall bias pivot, which would just be, what, 9 pips higher, or 8 pips higher right here. So we might be able to, let's say, take out this high and then a little bit run out of gas here. Let's go on and get back in the chart. That can go on and impact the dollar yen, negatively impact the dollar yen. It trades inversely to the bonds, as y'all know. Let's get back here. Time is clipping along. Okay, so right now we've talked about this 1815, and the market got up here and it kind of closed a little bit. I mean, we closed on the level, so it wasn't giving us a buy signal. And right here, this range was very tight. So I don't know if you'd have been able to hang your hat and say, whoa, we're going to go higher. Because we said we needed a 2-hour close above 1815 to open the door. Well, we closed here and the market is sitting here. So that would have, technically, that would have left you really neutral. I mean, because the bar is so thin. I mean, you're wondering, is it going to run out of gas? What are we doing? You're looking at it, and it closes, what, 2 pips above it? You'd be like, you know what? I'll have to get a little bit more ideas on what we're going to do here. Although we did spike up here, but look how we closed really poorly. So any fades against this 1815 make the most sense until proven wrong. So we've had that marked for a long time. 1815. You see that here? So now that we look here, and it looks like there's a possibility for a correction. I just showed you the bonds. So the bonds look like we can, look for a potential move going forward in the bonds to go higher. We talked about that 49.2, 49.11 yesterday, and the 49.2 held the market. So on pullbacks and where we're going to go and find support, initially it's 117, but sells against this 1815, I believe, for starters, will target 1550. Sells against this 1815 are going to target 1550 for starters. So, but right now, for the immediate future, 1815 remains resistance, as it's been since last week, and 117 is going to be initial support. Yeah, you can come down here, and we'll probably come down here. The dollar yen is holding up relatively well at this point. If you take a look at, and so that we're all on the same page, I'll have to jump on a break real quick. If you look at what the bonds have been doing, the dollar yen is really holding up really well. You would think the dollar yen would be coming apart. It may still come apart, but so let's get back to the chart and we'll go on break. So as it has been, 1815 remains resistance. I think there's a move potentially down to this 1550. That may not take place until we have to get past NFP. That being said, for right now, support's got to be here at 17. I think we already had that marked off. Yeah, we do. So it's already time for break. We're already up next over break, and we still have the bias chart up, and we'll be back shortly to cover the rest of the majors, spend some time on gold and other markets. And thanks for joining us here on the Morning Edge.